So as we take a look at the automotive outlook, there are a lot of complexities. We can, of course, talk about the sales volumes, and we have to because it drives production and everything really that we're involved in. But there are a lot of other complexities with this industry that we have to take into consideration right now. Even though it appears that there's some flatness in the industry right now, I think really if we take a look at that flatness is actually the reaction of netting opposing factors that are swinging pretty highly. And so we have to take advantage. We're going to take a look at and highlight a few of these different complexities that we need to take into consideration in the industry right now as we move forward towards the growth scenario that Mike talked about. So we're going to take a look at the U.S. Sales snapshot. J.D. Power has done a great job in working through the numbers, I think, and bringing out some of the complexities of the industry and some of the issues that are buried in the numbers. We're going to take a look at that. We're going to talk about some regional variances. One of the things that we're finding right now is that it's not just North America, South America, Asia, but really we have to break apart the North American region. We're breaking apart the Western European region. We can't look at Argentina and Brazil as the same. There are a lot of complexities, not only between the regions that we're seeing, but inter-region as well. We're also seeing some issues regarding availability of commodities. The semiconductors is a big piece of that, and is that potentially a leading indicator of issues that we're going to have with commodities going forward. And we'll talk a little bit about some industry studies that KPMG has found with auto execs and what they're thinking about as they look forward from 2010 through 2015. So in terms of the revised forecasts and the volume estimates, of course, as we've heard mentioned numerous times here over the last couple of weeks, the recession's over. Yet on the other hand, of course, a lot of the growth indicators, as was mentioned on the economics, are still red. They're slowing down. There's some concern that this bit of malaise that we're seeing here in the U.S. is going to continue to move over to the European continent here over the course of the last 6 months. And we do have some building commodity availability and cost pressure. So when we take a look at the sales scenarios, we're seeing some moderation really of the forecast. And part of that is due to really breaking apart that sales forecast and taking a look at the impact effectively on the inventory build, the impact of fleet sales in those sales numbers, and really the ultimate improvements in the balance sheets. As we take a look at some of the sales numbers here, again from J.D. Power, if you take a look at 2009 versus 2010, if you take a look at the total side, there's about a 9% increase in that number. However, when you break it apart and you look at it a little bit more specifically, you can see that 70 to 80% of that increase actually came from an increase in fleet sales. So that's really not that retail piece. So if you take apart and you take out that inventory build, you moderate down that fleet piece because that is not a multiple effect piece. Then really what you're taking a look at is sales on a bit more of a flat level. And I think that also goes to what we spoke with earlier in terms of things being a little bit flat, running out those excess vehicles through 2011. I think that's the fact that we're seeing here on the retail side is a bit of a flatness 2010 into 2011. However, which I should keep there, with the good news really fundamentally being that sales long term, really the outlook is effectively up in all regions. And so we'll see that here as we take a look at the regions. Though we're seeing this 2009, 2010, 11 flatness, really in all the regions, we're expected to see a pickup in volume for the fundamental reasons that we talked about in terms of the scrappage, the additional drivers being added. I can appreciate that to knowing where the new drivers are. I have 2 of them, so that two new drivers entering in, and I can guarantee you they're not driving my car. So there has to be some new cars bought here somewhere pretty soon. As we take a look at the different regions, of course, as we've spoken about, Asia just continues to be on a growth uptick. There's certainly concerns regarding regarding capacity and so forth. But if you take a look at South America, some interesting pieces there too. Obviously, Brazil, once again, being talked about. It seems like we've talked about Brazil on and off again for the last 10 years, but certainly on an uptick right now. And what we don't have in South America, however, that we do have in China is the number of providers, the number of both OEs and suppliers. Actually, an overcapacity situation in China that doesn't exist in South America, and so we are getting to a point where we could possibly have demand outstripping supply. And we're starting to see some pressure on the system there in terms of being able really to move out as many vehicles as the OEs would like to in that marketplace due to some of the supply constraints. The North America, again, a little bit flat, but certainly on an uptick as we move towards the back end of 2011 and 2012. And of course, a lot of consolidation, a lot of costs taken out of the system in North America that is leading to the margins moving up, and the ability with that excess cash to invest. We're going to talk about some of those critical investments here in a minute. On the other hand, on the EU side, remains relatively soft. We would expect the EU to continue to remain soft as we move forward, and really as we move out of and into yet another phase of consolidation into the EU. And I thought it was worth taking a look at that. Sometimes we lose a bit of our historical perspective, and as we move forward and take a look at markets like China, for example, where you have a lot of providers, a lot of manufacturers, a lot of suppliers, what are the phases of consolidation that they're going to go through? And are we going to see something similar to what we have seen in Europe over the decades? As you can see, really kind of some fairly distinct phases of consolidation in the European marketplace. And as we move here 2010 to 2020, yet another movement in the consolidation. Now, we haven't seen really the cost taken out and the efficiencies in the European market that we've seen in the U.S. market over the next 18 months. So we would expect to see really an acceleration of that, in particular here between now and the end of 2011. Issues relating to the availability of commodities and other products, and I think that is becoming a greater and greater issue as these new entrants in the Eastern European and the Asian markets come into play, as we see a continued growth, which is good news certainly on the automotive front, but part of that is an ability for the commodities to keep up. And one of these that we're seeing a lot of right now is in the semiconductors. And so the question is this really a leading indicator of other potential shortages to come, and how are we going to deal with the rationalization effectively of these products? Obviously, semiconductors are used across numerous industries, and the auto industry taking even a greater and greater bite out of that marketplace. And with the fluctuation that we've seen, while no one expected quite the decline, obviously, that we saw in 2008, 2009, not too many people saw the run-up that we've seen either. And the semiconductor industry, with that rebuild of inventories that we talked about, the fleets, as well as the growth in the Asian markets and the use of semiconductors across the other industries, has not been able to keep pace, such that even though they were down in the first quarter of 2009, they've seen a run-up here in the first and second quarter of 2010, such that they're at 95% or greater capacity. So as we all know in manufacturing, that's pretty much out, and that's above out, arguably. And so there's been a rationalization of semiconductors across the industry, and certainly for those of you manufacturers that are flying this product in and out every day, I don't have to tell you about the rationalization effects that are taking place in the semiconductor industry. So the question here is what is really going to happen? If we see this flattening in the back end here of 2010 and 2011, will it allow some of these commodities time to recover such that additional capacity will be built in, and so that the ongoing 2011 to 2014 growth trend will be able to be absorbed?